Are you watching Business Incorporated live on Channels Television? Coming up in the next 25 minutes. The Kenyan shilling loses nearly 20% of its value against regional currencies in under a year. And Egypt's tax authority generates 8.8 billion Egyptian pounds from 7,305 tax evaders. And Ghana's Monetary Policy Committee is set to hold rates at the next meeting on inflation expectations. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at what's happening in the markets, starting with the African continent now. We see the NGX there. Last I checked, the intraday was down. And we see other markets we track in that region. South Africa there, that's up 0.32%. It's the only gainer we have at intraday, talking about the African continent, 77,000. That's for the all-share index for the Johannesburg Stock Exchange. Other parts we track on the African continent, we see North Africa, the EGX 30, down 0.23%, and we see Kenya still holding above the 100 points for the all-share index, closed down 0.23% last week Friday. Let's move on to other markets now. In the Middle East, we see its positive sentiment across the board. The Abu Dhabi index, that's up 0.96%, almost 1%. Dubai index, trying to get above that 4,000 points for the all-share index, 0.24% up. Other still within the region in the Middle East, we see Saudi Arabia up 0.41%. Qatari index, marginal increase there, 0.02%. That's what we're seeing in that part of the market. Now, let's head on to London now. Let's see what's happening in London. We have Juliana standing by. Great to have you, Juliana. So earlier on Business Morning, we were talking to Ini, and we see Sharps there pledging to max out the North Sea's oil and gas reserves. Tell us more about this.
That's right. Good afternoon, Laddie. Grant Shapps, of course, is the Energy and Business Minister. And even though Parliament last week shut down for the summer business, we know that the business of government still continues. And he has been speaking to the Financial Times over the weekend. And I think this kind of coordinates with the fact that we had 3 by-elections last week. The Conservative Party lost 2 of them, 1 to the Labour Party. And there is lots of attention, I would say, now going to the Labour Party's manifesto. And earlier in the year, the leader of the Labour Party, Sir Keir Starmer, he did say that he is going to stop or prevent any new licensing in the North Sea to stop drilling for oil and gas. Now, he responded to that this weekend by saying it's absolutely ridiculous, that there is no way a Conservative government would continue to do that because, of course, ever since we stopped our dependence on importing Russian crude, we have started to look at home, and there are so many reserves there. So he said it would be ridiculous for any government to try and do that. Of course, there's been lots of reaction to some of the comments that he has made, because we are still trying to get to net zero emissions by 2050, and there have been a series of disruptions being caused across this country by an organisation called Just Stop Oil. They are closely tied with the Labour Party because I believe they receive donations. So there are questions as to whether, if we keep drilling in the North Sea, if we are going to meet up with those 2050 targets. Grant Shapps says yes, and even if not, they're not going to prevent drilling in the North Sea.
All right, let's look at social media now. See Twitter back in the news. This time they rebranded to X. No more Bluebird at some point. How are users in the UK reacting to this?
Well, this is pretty interesting, actually. I just had a look online, Laddie, and I still have the blue Twitter icon, very famous icon. In fact, I believe the bluebird, the light bluebird, is called Larry. And I think some would say that the Twitter icon is Twitter's most lucrative asset. But of course, the rule books have all been ripped apart since Elon Musk's $44 billion takeover last year. There have been a series of radical changes. Some would say this is likely to be the most radical. He put a tweet out last night saying that for no reason other than the fact that he likes the word X, that Twitter would be changing its logo. It was supposed to happen yesterday evening. It hasn't happened. Like I said, I went onto Twitter a couple of minutes ago. It's still very much Larry, but what is Elon Musk going to get out of that? Nobody knows. But again, as I said, this comes as there have been a series of radical changes. One was the fact that he axed 80% of their staff, including, of course, as we know, staff in Ghana for Twitter Africa. Very controversial. Apparently, he's owing about $500 million in severance pay. Then, of course, he's been charging people for a verified blue tick. And then, of course, he has reduced the amount of tweets that people can see if they're not paying for a verified badge. So, again, we'll just have to see how it goes. But Twitter has lost 50% of its advertising revenue since Elon Musk took over. And I think a lot of people like Larry. So let's see what happens. He said it's going to happen, but he said lots of things. He said that he was no longer going to be CEO. 6 months later, he's still in the job. So we'll have to check when we get off air to see if Larry is still very much alive and kicking.
I'll definitely keep checking, and definitely be weird not seeing Larry, when you go on to Twitter and just seeing that big X there. But how are the markets in the UK? How are they looking?
Not bad, actually. A slight pickup at intraday. We have had some CPI data basically showing a forensic look at the UK economy, and nothing to see here, although we know we're still limping our way out of recession. So at intraday, the all share is actually up by 0.04%. FTSE 100, that's up by 0.06%. And the FTSE 250, the domestic market, that's up, I'm just glancing up there, by 0.28%. Now, there was a rally in the British pound, but for the past 7 days, there has been a continued slump against the US dollar. In fact, we haven't seen a straight slump like this since March 2020. There seems to be some erratic changes within the currencies market at the moment, the Forex. The British pound is currently trading down 0.15% against the US dollar, although it's trading up against the euro by 0.22%, but down at intraday against the Japanese yen by 0.58%.
All right, Juliana, thank you so much, Juliana. Always great having you on the show. Thank you.
Thank you.
All right, now let's head on to Europe now. Let's take a look at what's happening there. We see Spain's Conservatives won the largest share in the country's latest general elections, but failed to secure the majority needed to form a government that could leave the EU's fourth largest economy in political limbo. Let's hear more now from Chiponda Chimbelu right there in Berlin. Great to have you, Chip. So what will happen now that no party has an outright majority?
Well, what we will get over the coming weeks are negotiations to try to form a coalition government, and they are likely to get very messy. The Conservative Popular Party, the PP, failed to get the number of votes that would have been needed for it to form a coalition government with the far-right Vox Party. They would need another 7 seats in parliament to have a majority. So a third party would have to be part of that coalition government. And now we know, since the socialists have said that they would block a minority government, there are no chances of them, doing that just with the two parties. The socialists themselves would be short 23 seats in a coalition with their traditional far-left partners. So neither they nor the opposition Conservatives have a clear path to form a government easily with their traditional alliances. They will both have to partner up with smaller parties. So many talks between parties are expected over the coming weeks. If both the Conservatives and the Socialists fail to form a government, Spain will have to hold another general election later this year.
Yeah, we'll definitely be tracking that. So why do these elections results matter for Europe?
Well, the new Spanish government would play a major role in deciding how the country positions itself when it comes to issues like climate change and migration, which of course are amongst the biggest topics for the European Union's agenda. But that wasn't the only reason why this matters for the EU. These elections have also been closely watched across Europe and of course the world, because there were fears that if the opposition PP did very well, they could form a government with the far-right Vox party. That would have made the far-right part of the government for the first time since the end of dictatorship under Franco in 1975. But it looks like the far-right is unlikely to become part of the government now because of their extreme views on social issues and climate change. A third party is unlikely to join them, and the Conservatives, of course, in a coalition. And the potential kingmakers in this election are a separatist party from Catalonia. They will not side with the far-right because the far-right has said it plans to ban separatist parties in Spain in the future. So while the Conservatives have scored a win in this election, the fact is that they are short of a majority, and that means that Spain is unlikely to become the latest EU country to shift to the right after Italy, Greece, Sweden, and Spain.
All right, Chip, still a developing story there, but what can we expect from markets in Europe?
Well, European markets are expected to trade lower today. They are in waiting mode. This is set to be a busy week for central banks, including the European Central Bank. It's been a year since the ECB began lifting interest rates, and they will be meeting this week, and they are expected to raise interest rates by 25 basis points. Now, that will come at a time when the euro is trading at the highest level in 18 months against the US dollar. So, of course, that will be watched very closely by the markets. The data expected today includes Spain's inflation and Germany's manufacturing data. And earnings reports will be coming in from Philips and Ryanair, of course.
All right, Chip, thank you so much. All eyes on the central bankers this week. What are they going to do next? Is it a new rate hike, or are they going to pause? Or are they going to cut? Who knows? All right, let's take a look at what's happening the U.S. markets now. We see U.S. stock futures edge higher today as investors await a batch of key earnings reports and a major policy decision from the Federal Reserve at rate setting season right now. The Dow Jones Industrial Average, that's up 0.14%. For the futures, the S&P futures, 4,573 points. That's up 0.19%. And we see the tech-heavy NASDAQ leading right there for the futures market, 15,576 points. Investors are coming off a positive streak, off gains for the Dow Jones Industrial Average. The blue chip Dow eked out about 2.51 points gain. That was last week, Friday. So we'll be watching out for how those markets close later today. Let's take a look at what's happening with Asia Pacific. We see markets were mixed there today as investors digest key economic data from across the region. First look behind me there, we see the Nikkei 225, that's up close 1.23% up. The Kospi, 2,628 points, up 0.72%. The HSI on the flip side closed down. Big 2.13% drop. Other markets we track in Asia, there we see those markets also not looking so bad to close. We see the Shanghai Composite, that was down about 0.11%, ending at 3,164 points. See what's happening with oil now. See global oil prices steady today as traders expect more rate hikes from the U.S. and European central banks, but tightening supply and hopes for Chinese stimulus underpin Brent well above the $80 per barrel mark. Brent crude futures out rose by 4 cents to $81.11 a barrel, while the U.S. WTI crude is trading at $77.11 a barrel, also up 4 cents. The benchmarks rose 1.5 and 2.2% respectively last week. That's their fourth straight week of gains. Supply is expected to tighten following OPEC plus cuts. Fighting also escalated last week in Ukraine after Russia withdrew from a UN-brokered Safe Sea Corridor agreement for grain exports. And gold prices held steady today as investors waited the U.S. Federal Reserve meeting this week, where the central bank could signal a pause in interest rate hikes from July. We see spot gold was little change at $1,960 per ounce. While the U.S. gold futures, that fell by 0.2%, $1,961 per ounce. The dollar index inched lower, but held near its more than 1 week peak, hit on July 20th, limiting gold's rise as a stronger dollar makes the metal more expensive for holders of other currencies. And still ahead, we'll look at expectations for monetary policy rates on the African continent. That's our next conversation. Just stay with us. And as I said before, it's rate-setting season. And on the African continent, we have decisions already from South Africa. Nigeria's MPC decision, we'll get that tomorrow. And Ghana is likely to hold rates in the next meeting. Looking forward to that for Thursday this week. Joining me now is Samson Owolabi, Associate Research and Portfolio Management at Zcrest. Joining me via Zoom. Great to have you on the show.
Yeah, thank you very much. Thanks for having me once again.
Yeah, so globally, countries are battling inflation, and in Africa, we've seen major economies, raise rates since 2022 into 2023. In your opinion, is Africa or some countries in Africa winning the inflation battle at all?
Okay, so thank you very much. So concerning that, what I would say is that we are seeing mixed reactions and mixed sentiments in that particular space. What I mean by that is that we are seeing some countries see inflation subside, and we're also seeing some countries see inflation still continue sustain its uptrend. For example, in South Africa, the inflation rate is to 19 months low to 5.4% in June. So that's 6.3% before. And we can also see that in Egypt, inflation increased to 36.8% rather in June from 32.7% in May. So we can see that inflation is going up in some places and it's coming down. And we can also see that in China, inflation increased moderately from 42.2% to 42.5% in June. So we can see that even though China has seen inflation rise to the level of 54% earlier this year, we've seen that it has let's say tapered a bit to a considerable extent to 42.5% from that peak. So we are seeing that particular movement in some places coming down. However, in some places it's going up. But generally, inflation is still tapering, and we are seeing that the fight against inflation is still showing positive signs.
All right, and the CBN MPC concludes its July meeting tomorrow, first one for the Tinubu administration. What are you expecting?
Okay, so concerning that, I will say that this is the biggest monetary policy meeting that we are going to have, because it's very, very important, and there are several issues concerning it based on the fact that we do not have a CBN governor presently. However, they also have to factor in so many things, because we've seen our money supply rise to 63.4 trillion naira, which is very, very massive over time, a record high. So we are seeing that they might want to let's say maybe hold the rate steady or to cut it out, even though the president has said during his inaugural speech that he wants to let's say cut interest rates low, so that it's going to be favorable for the business environment. However, looking at the place that we are currently, cutting the interest rate might not really be the best option right now. So I still want to keep it, maybe hold it steady, and also look for other ways to ensure that inflation reduces.
Definitely, whatever happens tomorrow, if we see a hike or a pause, how do you think the markets are going to react to that right here in Nigeria?
Okay, so looking at that, how the market is going to react, one thing is that personally for me, I think the monetary policy rate, it has lost its signaling effects. We have seen it them increases over time, and then the market is not really taking this into consideration. We are still seeing our treasury bills go down, the rates on treasury bill go down, presently at around 3 to 4% right now. So this is a particular issue that we really need to look at it and to just find a way that instead of just hiking interest rates, we might want to let's say employ and try to use that other tools to curb inflation and to also stabilize the economy. So however, whatever decision they make, maybe they hike it or not, we might not really see the market move in that particular pace right now. But the decision is a very, very important one.
I know investors right now looking for, ways to make profit in most of these markets at this time. But what strategy should investors in Africa adopt to make, positive real returns in this inflationary environment?
Okay, so concerning that, even though we have inflation skyrocket and go to a record high presently, we are still seeing like investment opportunities that bode well for investors. We have inflation at 22.79%, and then we still have the equities market, the Nigerian equities market, doing like 26.8% as of Friday. So we are seeing that kind of like, let's say, the year-to-date returns. We have seen it to be positive, even above the inflation rate, and we have seen some stocks rally significantly. So even though we have the yields dropping significantly in the fixed income markets, we can still see that there's still opportunities in the equities market. However, we cannot let's say look away and forget about the aspect of balancing your portfolio against risk. So I would just say that investors need to we might just want to be more proactive now, not follow the traditional rule of saying that maybe 60% in equities and 40% in fixed income. I want to be dynamic and move with the trend and look at opportunities in each market and find a way to just take profit in that space. However, the equities market is really showing signs of improvement, and is showing a place that investors that wants to beat inflation might want to look at.
Right, investors right now struggling to beat inflation at this time. Thank you so much, Samson Owolabi, research and portfolio manager at Zcrest Wealth. It was great having you on the show.
Thank you for having me once again.
All right, now let's look at some other stories now. Let's look at what's happening in East Africa. We see the Kenyan shilling has experienced a significant decline of nearly 20% in value against regional currencies over the past year, weakening its dominant position in the region. Traders importing goods from Uganda and Tanzania are feeling the strain due to the currency's devaluation. And the Ugandan shilling has gained about 29.5% against the Kenyan shilling since the onset of COVID-19 disruption in March 2020, while the Tanzanian shilling and Rwandese franc have also strengthened by 24.1% and 10.7% respectively. This continuous depreciation of the Kenyan shilling negatively affects Kenyan exports into the region, making them less profitable. Conversely, Kenyans buying goods from Uganda now face higher costs due to the weakened shilling. And Egypt's Ministry of Finance reported that the country's tax authorities have collected about 8.8 billion Egyptian pounds, that's about $286 million, through 7,305 tax evasion cases out of 22,000 cases identified since the launch of the e-invoice system in November 2020. Minister of Finance highlighted the system's success with 130 million e-invoices issued since April 2022. The e-invoice system, which was introduced in 2 stages, requires VAT-registered companies selling taxable goods or services to submit electronic invoices on the ETA's online portal. The initiative aims to promote tax justice, combat tax evasion, and formalize the informal economy. Additionally, the e-commerce market in Egypt is expected to grow significantly, reaching $7.88 billion in 2023 and projected to reach $15.71 billion by 2028, according to Mordor Intelligence. And Ghana Central Bank is likely to maintain its benchmark interest rate at 29.5% for the upcoming meeting, as most economists believe the recent rise in inflation is temporary. A decision would provide policymakers with the time to assess the impact of the Finance Minister Ken Ofori-Atta's midterm budget review. While some economists anticipate a rate hike of up to 250 basis points, many expect the central bank to hold the rate steady due to uncertainties surrounding the budget review. The review, scheduled for Thursday, will be Ghana's first since undergoing debt restructuring and receiving a $3 billion financial aid package from the International Monetary Fund in mid-May. The IMF program requires fiscal consolidation and increased revenue collection, which would influence inflation. Ghana aims to reduce its debt to about 55% of GDP by 2028, down from 71.2% at the end of 2022, as it seeks to support its economic recovery and the world's second largest cocoa bean grower. And that's the show today. Thank you so much for watching. I'm Ladi Williams. I'll catch you again tomorrow.